All right, so Tesla is now below 1,000 PE. Must be a buy, right? A buy of a century. You can get Tesla below 1,000 price earnings ratio. I think it's below even 900. Whoa! So Tesla's PEs had dropped like a brick in water. That must mean it's a value stock, right? Why is Tesla's PE ratio drop is so low? So low. Because the prices dropped so much. Not because earnings are shooting through the roof. It's because the price, my friends. PE ratio, the price over the earnings. That's your PE ratio. So if you have $1 of earnings, that's your, what is the numerator is at the bottom? I can't remember. So if you got whatever it is, so you got it, we'll say $100 is the share price, and $1 the earnings. 100 is the top, the dollar is the bottom. You have a PE ratio of 100. That's nosebleed, all right? So if Tesla back on Thursday had a PE ratio of 1,100, that means it had $1,100 of price for every $1 of earnings. That is pure insanity. And someone is getting killed in there. There's a guy in here. It's named Andrew Noble, I think. He said he's going to ride Elon Musk to the retirement promised land. Look, man, that's like saying I ride Bitcoin to the retirement promised land. Doesn't mean it's not going to come back. No one has any idea. That's pure speculation. This isn't fundamental. Now, the drawback of a fundamental analysis is that where you're looking at price to earnings, price to sales, price to book, dividend yield, all this stuff, is that if you truly believe it's a random walk down Wall Street like Burton Malkiel did from Princeton, he had written a pretty classic book in investing literature. You know, essentially the same thing as monkeys tossing darts to a stock chart and doing just as well as analysts. If you truly believe it's a random walk, then you'd have no problem having some Tesla. You say, look, none of these, it doesn't matter. Look, I'm somewhat sympathetic to that. I am, except for the fact that I also believe in the school of thought from French family that says valuations matter. Valuations matter, i.e., you do not want to pay $1,000 for $1 of earnings. At some point, that will come back to bite you in the butt. When, where, how, I don't know. You know, don't forget the market can be irrational longer than you can stay solvent. Does Keynes say that, or was it Buffett? I think Keynes may have stated that. I think it was Keynes. In the long run, we're all dead, is what Keynes says. But anyway, at the end of the day, just because Tesla is trading at 1,000 PE doesn't mean you can't make a bunch of money. But now it's 850. It just means that it's trading incredibly expensive relative to its earnings. I just, man, this is where I just think buy the index and be done with it. And, you know, like I'm somewhat, I investing every 2 weeks into VTI. Every 2 weeks I'm investing into VTI, the Vanguard Total Stock Index. But I also have some foot in the ground on the Malkiel thought, random walk down Wall Street, where I'm just buying the index and being done with it. That'd be Malkiel's argument. It's like, look, man, at the end of the day, nothing you can do is going to make the investments, no matter your research, no matter your ingenuity, nothing you can do will make your investments outperform the market. You just don't. It's all luck, speculation. There'll always be a Peter Lynch. There'll always be a Warren Buffett. There'll always be a Sir John Templeton. Always will be. Just a basic bell curve statistical anomalies. And you don't know who those people are in advance. You just don't. So if you don't and you can't beat it, you might as well join it and just buy the index and watch your fees. I completely agree with that, except for the fact I do find value has a value. There's fundamental analysis makes sense too. Buy the stuff that's cheap, man. I mean, just from a basic perspective of saying something is trading at 1,000 to every dollar of earnings, something has to give there at some point. Now that's my rational composure in that regard, but again, the markets can be irrational longer than I can be solvent. However, I will always defer to saying if something is trading at 1,000, I'd rather not buy that on itself. I'll buy that as part of an index, sure, but I'm not buying that in of itself just because that simply cannot continue up there. That's nosebleed stuff, and nosebleed stuff at some point will come back to Earth, and I don't know when, where, how, but it's going to. So just because Tesla is now trading at an $850 PE ratio is nothing more indicative of the fact that its prices has dropped. Kind of going back to the value stocks in the March of 2020. Not value stocks, all kinds of stuff. We had PE ratios, what Norwegian Cruise Lines at 5. Well, the reason we had PE ratios at 5 is because the price dropped relative to its last posted earnings, and because of that, you just don't know, man. You just don't know. But the price had fallen so much in the end of March relative to its last quarter posted earnings that had a PE ratio of 5. But what that did not take into consideration of what the PE ratio would be going forward because of the shutdown and whatnot. Anyway, interesting. So I would stay away from Tesla, but do what you got to do. We'll see you.